Okay, good evening, good afternoon, wherever you are. It's 4:30 here, 4:35 Pacific here in Washington. I guess and it's 7:30 over in South Carolina right now. Um, I am trying to kind of a new setup. As Brad was saying, it looks like you have a little bit of a new background. I am trying to spruce up this little office here, with some good stuff, all that. We will see how I kind of get this going. But yeah, this is our second episode of the Sunset to South podcast YouTube channel, whatever you want to call it. Um, trying to get some interesting subjects. I think last our first and inaugural show last Wednesday, I felt went really well. We had some great interaction from the community. Michael Baker is in the channel at the beginning. Hello, Michael. Thanks for joining. Bring your questions on. We're doing a little bit of more just stuff to kind of think about in regards to equities, stocks, and kind of some current stuff. And we'll get back into kind of the real estate mortgage type questions or whatnot. But with summer approaching, or I don't know what your definition of summer is, but it may be here already. Um, is the supply still low and the demand still ticking up for you?
Uh, it is still low. It is actually today I had a photo shoot for a new listing coming up. It's actually pretty cool. These folks are building, so they're building a house, and you get the benefit of that. I think is you don't have to list your house like trying to coordinate everything. All right, we've got to buy a house, but we have to sell our house. But how do you time all that and having it just fall into place? Like every domino has to hit at
Yeah.
the right time, and it can be a little stressful, and it's stressful for um, homeowners as well to like coordinate all that stuff. So what they decided to do, their house will be ready sometime in August. They said, well, we've got family we can stay with. We want to go ahead and list our house. And we happen to be they're leaving next Tuesday, going to Chicago until Sunday. They said, all right, list our house while we're gone. Hopefully when we get back, it'll be done and we don't have to show it. So it's free to
Wow.
show. It's wide open. So I had photo shoot for that today. So yeah, it's picking up, but as we will probably see in our slides, there's still a pretty big deficit. So yeah, we're trying to just do stuff like this, talk to people, educate them, and
Oh.
what's up?
Oh, I don't know if it's my internet connection or whatever, but we lost you for a second there. I don't know. It
Oh,
might be
did
me.
you?
Just for a bit, but I think you're good now.
Okay,
Um,
cool.
but no, yeah, I think what we're going to talk about I think a lot of people's fears right now, whether you're observing the market, you're thinking about getting into the real estate market, or you are your your income, whatever it has, like the expense of owning a home or buying one. And I think I would say naysayers. There's very like cautious people out there that are saying, what if the housing market crashes like it did in 2008? Or why why would I pay, which is are all very logical thoughts and ideas and questions. Why would I pay, you know, 500,000 for a house when the payment was like double than it was a year ago? And it's very confusing for me too. Like I whenever someone asks me that question and they bring up like 2008 and defaults and all that, I always just say like, it doesn't make, you know, how, how do you say this, like macroeconomic sense, because rates are going up, and so therefore asset prices should fall, not just in real estate but like in equities too. um all I can say is that, look, the data is the data. Like from last week, what we kind of hit was prices, and South Carolina, they're up 10% year over year when mortgage rates have doubled. I mean, it's a national thing. And in Washington here in like the greater Northwest area, we're only down 0.7%, and in some areas we're up 3.3%, where before, like 15 years ago, that wasn't the case. When rates started to tick up again, asset prices fell. And I think it's just it all goes back to the microeconomic supply and demand with anything, whether that be first appearance of Kamala Khan or that Wembayama like rookie card that everyone's trying to get, or the first appearance of Tiger Woods. It's all about supply and demand, I think, first and foremost, and what kind of hits that kind of and people still want to buy a house. They still want that American dream of owning a home, and so that nostalgia is still there for families, and the need for it too.
Yeah, I was going to say necessity. The necessity is there, to do that. So, yeah, it's interesting, and we might just have some slides that illustrate exactly what we're talking about. So,
yeah, maybe, yeah, we'll see. But yeah, so yeah, I this week, I kind of want to do kind of a fun, like I wouldn't say fun, but more of a interesting observance of kind of the craziness of the pandemic that kind of fueled a lot of just crazy and I would say FOMO type, like panic buying, panic investing, whatever you want to call it. The investment landscape of 2021 to 2022 pandemic era investing was so different from like every other like crazy market, whether that be the dot-com craze, the real estate crash, whatever. A lot of the big thing was social media really pumped up these investments that we're going to talk about in a little bit. And I would say I was privy to some of those as well. And a lot of, I remember when I was looking through these stocks or these equities, I was thinking to myself, what the heck were people thinking, and what the heck was I thinking to that company actually making a profit in a very small amount of time and it being feasible. And I think what a lot of these companies didn't have or don't have now is cash. I think when you're, and maybe we'll talk about that in another show sometime, but one of the biggest things when you're looking to a company that is, kind of like you're really not sure about, like the one thing you should always look at is how much cash do they have in the balance sheet to pay the bills. I won't get into that, what you really should analyze in an earnings report. But all of these companies, except for I think privy to one, there wasn't a lot of cash in these companies because they were basically startups. And they were getting a lot of VC money at the time, but as you'll kind of see, it just didn't make sense to where these stocks ended up at the high of where they were at to today. And it's just kind of interesting to see. Again, it's not really real estate or mortgage related. It's just more of like protecting your money and just kind of seeing a comparison of what the landscape is now compared to back then. And that's where the money went. Maybe the money went out of equities and into buying homes in our areas that we live. I don't know. Did you have any clients that were like, oh, I sold my AMC or my GameStop stock and I wanted to put it towards like a down payment on a home? Did you see any of that stuff going on?
I did not. I don't know. Maybe I don't know. I didn't even. I mean, I personally didn't hear about any of that stuff until it was a full blown story. Like by the time I heard about it, you would have been crazy to get involved. It was more like, I don't know, I guess one of those things that it seemed to me like that you could see what was happening. It was fun to follow, but I'm pretty conservative, and I think a lot of people just here generally are conservative. So I don't know if it would have, hey, I'm going to take my my government check and throw it down on some stock and try to stick it to the man and earn some money. So yeah, I didn't. I wouldn't have minded seeing some, having some people who wanted to invest in all the money they made on these, on some of these stocks, but It was more or less like something just to kind of follow, and
Yeah.
it's intriguing for sure. But yeah, I didn't have
Yeah.
any.
Yeah, and you know, you're probably right. I would say that my kind of prowess of that whole meme craze is I broke even or made a little bit of money. I didn't get killed. I didn't buy, you know, GameStop at $1,000 or however much it was at the peak, or just some of these other ones at the peak, just because it didn't make fundamental sense for me to invest in a movie, you know, a movie theater when there's a pandemic going on.
Did
You
you
know,
invest in AMC and GameStop?
I did actually invest in AMC, and you know what? Shoot, let's just get into it. And I'll kind of go over like what my thought process was. We got two live in the chat. Not a ton here, but we are still growing, and I hope people will catch the rewind just to at least kind of see what we're talking about.
That's how I've been marketing it to folks. Is hey, we
Yeah,
go to that link because they'll all be posted. So there's you know, I like you said earlier, I thought the last episode slash the inaugural episode was
sure.
chock full of really good information, and based on the slides we've been setting up, I think this one is on the verge of having the same type of quality information. So yeah,
Definitely, man.
if you're watching on the rewind, thank you. We appreciate it. And if you're
Yeah,
watching live, we appreciate it.
yeah, and you know, if you are watching live, please ask questions. I don't mind people asking the questions like, during the presentation, but and we will try and get to each question. It just may take us a little bit of time to get to them. But yeah, ask away. I loved the questions last time, so
I did too. Yeah, it's been very interactive so far.
yeah, no, it's great. I love it. And so today we're talking about meme stocks from 2021 to now. Just kind of I would say I don't know if it's a fun one, but a topic to kind of think about when you're making an investment in anything really. And you know, a lot of our obviously like a lot of our audiences comes from comics and collectibles, and that and looking into that space, it's unregulated, so it's really it's tough to kind of you know pinpoint like where like those assets really like dropped, and it's just not enough information that's correlated. But I think you can use the information here to make your buying decisions in anything, whether that be a comic book, a baseball card, a home, what have you, an equity, you know, just to grow your wealth here. So
Kind of like a
um,
blueprint for that you can apply to different things.
exactly. And you know, I think when we were making the show, our biggest goal was just to save people money and let them know like not to give into FOMO and not to give into crazy things. And I hope people get that out of the show today and going forward. Another topic we want to talk about, it's why this isn't 2008 real estate wise. And I think we're going to hammer away that kind of notion. But some things to kind of look out for too. Um, and then our credit tip of the day, just kind of going to that. And then Brad's the more you know portion will end our show, and then with questions at the end if anyone else has any questions. So I picked 6 meme crap stocks to kind of go over. Now this isn't necessarily means these companies suck, but the pitch for these companies was very it just didn't make sense to me. And whether that be manipulation, whether that be, you know, social media just pushing the envelope, it's ultimately when it comes down to investing in anything, it's really up to you. Unless someone has a gun to your head saying you have to buy this stock or buy this comic book or buy this baseball card or what have you. It's really up to you to dissertate that information and decide whether it's a good thing. Now, Brad, you said specifically that you didn't really get into this. Why didn't you get into it? I'm just curious.
Probably a couple of reasons. One, not really knowing where to jump in, you know, or like how would I go about doing it? I think
Mhm.
would be the one, and probably a common uh, concern or question for the casual, you know, person that wants to get involved and play around with this. But where do you do it? How do you do it?
Mhm.
That kind of thing. And then I think there's so much information. Like, how do
Yeah.
you know what to choose?
Mhm.
I think probably those two factors would be the biggest for me.
Yeah. And I think in a general sense, like when people ask me like, what do you invest in? And like, how do you find this information? And it's like, I think it's just like invest in what you know or what you enjoy at first. Or at least research those companies and then kind of go from there. And kind of going over each one here. So we have Truth Social, which it was basically a conservative Twitter, essentially. Um, Before Twitter was scooped up by Elon Musk, there was a lot of conservative social media people, or just people that wanted a different audience. And the pitch was to have this basically Twitter for conservative subjects and members. Now, you have to have a lot of cash to pay people to run a company, right? And the way during 2021, 2022, were the way to get cash kind of generated versus going IPO were these what's called SPACs, or special asset or special asset proof companies, basically. And so what that means is there's like a company that puts together like $250 million, and they go out and say, hey, we merge with you, Truth Social or Fubo AMC, and we'll give you $250 million to get your company started versus going IPO. We just get like a 51% stake in the company. And so that was a big trend. I mean, there was like over 450 or so SPAC companies that merged with real companies to kind of grow an investment. And from a secondary market standpoint, it was an easy way for the little guy to get in, quote unquote, IPO into a company, because the shares of these companies were like $8 to $9. And typically, like, still a growing company, and so it may take a while to get from $8 to $9 to like 50 or whatever it would be. And in this case with True Social, um, the fact that there was a lot of political contention going on in 2021, 2022 with whatever subject you want to put in there. Um, there was a lot of interest in this company, and a lot of people wanted to invest in it. Initially, the I think the initial price was around like 12 to $15, and then President Trump started to come out and tweet about Truth Social. Well, whenever a very like famous person via Elon Musk, Trump, whomever tweets about something, whether it's a pro or an event, whatever, people are gonna know about it. And this company went from like $20 to 45 to 60 like overnight after his tweet. And basically he was saying like, I support this company. I'm gonna move my profile from Twitter to this new app. And if you can just think of how much Trump meant to like Twitter as far as market value, and he was going to take that value over to another conservative, company. That's huge, and so I think that's what really pumped up this stock. And at one point, and this is midday, it went from the high 70s to 180 in the middle of the day. And so in a
Wow.
way, it's FOMO. I mean, imagine. I mean, this is like your classic like Black Panther 3 Tosin, kind of deal, but times like 1,000. And at the peak, so these numbers I got are as of close. So November 2021, which is like the peak for Bitcoin, the peak for a lot of other stocks, it hit $92 a share at the end of day. And today, it's $12. So if you bought this stock in November 2021, and this is not a political thing, this is just straight data, you're down like a lot. I mean, and the reason being is because, um, well, Twitter reinstated Trump for one, and so that hurt the prospects of this company. And two, I think a lot of like, I think if you put a lot of like, it's like Twitter's the ultimate like battleground, right? You can have a liberal, a moderate, and a conservative all kind of battle each other. But if you just have a bunch of conservatives on one channel or a bunch of liberals on one channel, there's no real, like, everyone agrees, right? Unless it's a far extreme. And I think when investors start to realize, like, oh man, like, if you don't have users for this app that's in beta testing, basically, how are you going to get it? How are you going to grow it? Because you just have to have more conservatives go to this, because there's no liberals are going to go into this app. They're just going to start, some stuff. But other than just the actual growth of users, there's been a lot of, and I'm kind of being broad here, but leadership hasn't really kicked off like the growth of this company, and there's a lot of technical problems with the app. I think just wholeheartedly, it just hasn't caught on. The user base hasn't grown, and so I think that's why $12 a share is where it's going to stay at for right now. It's going to need, it's going to really need a lot of cash to infuse into the company to grow its prospects, and it's just has to grow that user base and prove it to investors to come back to Truth Social. Have you ever heard of this this app or this company before?
I have not, but I was as you were saying that, I was wondering if Elon Musk buying Twitter affected the development of this company.
Yeah, I think so, because even though Trump has actually stated, like, I'm not coming back to Twitter anytime soon, it's like, well, you have the open invitation to come back. And I think also the fact that Elon kind of taking the reins off of a lot of, quote unquote conservative users, it's had an effect on, well, if I'm invited back to Twitter, what's the point of going to this, this space where I can't really, combat people? Where Twitter's kind of fell into. And then, the big companies like ESPN, CNN, what have you, I don't think they have a strong presence on Truth Social. And they're the ones that are going to pay ad money,
Right.
But yeah, I think you're right. You've hit the nail on the head there. Cause like one thing you're going to look at when you're investing in a company is like, why did you invest in that company? Like for Apple, when I invested it back in 2007, 6, a gentleman had shown me his iPhone, and I thought it was a revolutionary like product. I had no, I just, it blew my mind. And I said, I need a piece of this company. And that's really the reason why I bought Apple. And I think when and investors, with True Social, when Trump made that tweet, it was a big deal. And if Trump's not, there in this app, and that's the reason you invest in the company, then you're out. I think everyone should always have a reason why they leave a company or an investment as well. Just like when you read a comic book, like if they kill off your favorite character, why are you reading the comic book anymore? Like I stopped reading Venom after they killed off Null, that kind of thing. So,
right.
Anyway, well, let's see here. Okay, so the next one, Fubo. Do you have Fubo? Do you use Fubo at all?
I've got the app on my TV. I don't know that I really use it.
You have the app on your TV, but you don't use it. Why?
Like,
why don't you use it? I'm just asking you broad questions.
It's is it primarily soccer?
It's like their pitch back in the pandemic was, yeah, we have all soccer, we have random sports, a lot of just off-brand kind of sports rather than like ESPN, that kind of thing. But like their big push was European soccer. They had all the channels supposedly. And this was this was another meme stock here. Fubo was really pushing the whole like work from home, I'm isolated, and they were trying to really push gambling via like a controller. And so what they were pitching to investors is like, hey, get Fubo, and within 6 months, we're going to start getting licenses to set up betting in these different states, because that's what really deters betting, right? So investors were like, if you can bet $5 on like, a game, times that by user base, right? Then and you take just a little bit of money off that's going to be a growth spurt for Fubo, right? And with that said, it rose to $60 in February 2021. Now, as of today, it's $1.32. Let's just say they never really got any headway on all those licenses to allow gambling in different states. And the really unfortunate thing with Fubo is and again, I talked about this earlier, if a company's burning cash, they're going to have something really big to help them not burn cash if they're a growing company. And what Fubo was dealing with was, so like, let's say that you are a Fubo user and you pay, let's say, $100 a month, right? So if you're Fubo, you have to do these different packages. So like, let's see, the all sports package is like, $150. The all XYZ package is $125. Well, the content that Fubo has to pay to those different stations was like, $200. So each subscription, they're losing $50 per subscription. Now that's okay if you can offer, like, say, gambling, and that user spends maybe an extra $200 in gambling, right? That's how you make your profit.
Right.
But Fubo was dealing with something that it was like they couldn't really guarantee it. It was just in the process, but they were trying to gain users, and I think they just ran out of cash. That was the problem with that whole thing with Fubo. Did you know that there was a concept that Fubo was trying to offer gambling, and would you partake in that, like $5 on the over under on a Lakers game or something?
Well, so the stuff that they offer, so being in the South, it's basically college football and then everything else.
Yeah, right.
So the soccer thing wouldn't have been appealing to, a lot of the southeastern states. What's up, man? The soccer wouldn't have been, that it's not a popular sport here. So I did not know, but I wondered. So when you were saying that, I wondered to announce that you're working on something. I would think you would be pretty far along in the process,
right?
To throw that out there. I mean, I wonder if were they hoping, or did it just fall through? And I wonder, obviously they made that announcement far too quick to see any real benefit come from it. But that's an expensive, like, those packages are expensive.
They were.
People are trying to cut the cord, then
you're
not really, it's counterproductive to offer, like, we're more expensive than having regular cable.
Yeah. And that was like kind of where I was like, well, I'm gonna wait until excuse me, you guys get the licensing to gamble, because that's very entertaining for me. Like, what's $5? I'd probably do like $10-20 a week or something, and and that's
like,
just
keep
me.
it on an account that you just play money, like if you're watching a horse race or something or whatever.
Exactly.
That would be cool.
Nothing's gonna break the bank, but then there's gonna like kill your bank, or whatever. And I just thought that, but it was like an appealing kind of thing. Like, oh yeah, that's worth $80. Because I cut the cord at the time too. But when I invested in Fubo, excuse me, I was really like, oh, I think this could work, but all they kept pitching was like, we're working on the licenses, but we need more users to report to these states that it's a conceivable kind of thing. And I think what they were also dealing with was DraftKings. I didn't put them in this report, but DraftKings was kind of making more headway in the actual functionality of gambling. I think they just had better lawyers. I don't really know, but anyway, yeah. The next one I want to talk about is AMC. This was pretty famous, I want to say, as far as like the meme stock of this past era. And no, wait, I'm not drinking vodka. It is straight water, I promise. If I was drinking vodka, I'd be turning bright red. That Asian glow. If you guys don't ever want to see me do that, but Wade with the fire comments there. AMC. Now, Brad, I'm sure you heard the AMC memes, the diamond hands, all that stuff. And I guess, do you have an AMC? And before the pandemic, was it packed?
Yeah, we have AMC and God, what's my favorite is the Regal. So Regal was kind of the first one to do like really nice seats, really nice sound. The
Yeah.
sound is important to me
Yeah.
too when I go to the movies.
Right.
So in fact, I'm gonna have to watch. I might catch the tail end of y'all's show tomorrow night, but I'm going to see Guardians of the Galaxy tomorrow.
Oh, okay.
So, and we're going to a Regal theater. I still like doing that. I still like the experience of being there. So, but yeah, we've got those two are the most prominent. Then we've got like a small, it's cool, but it's a small like independent theater. They'll have like Cons films and stuff like that, like more of a artsy kind of independent movie theater as well.
Yeah.
But yeah, the ones like Wade's mentioning, that Brewflix, I've never heard of that. It's pretty cool, but
Sounds cool.
Yeah, cheap. It's got a brewery and cheap.
Yeah, and I think that's kind of the future of movies, or of movie theaters, if you will. So this is one of those things where you asked me backstage before the show if I invested in AMC, and I saw AMC. I actually bought shares for my nieces and nephews at 80 cents a share before the whole meme craze occurred on this. I just said, you know what? Either the stock goes bankrupt and they each lose $80, or once this pandemic's over and people just, even the slight tick of people going to the movie theaters it's gonna be a $3 or $4 stock, was kind of my thought process. And then when the whole diamond hands, short seller crowd came out and started to attack AMC, basically to buy it up, I sold it around $11. And the reason I sold was because I couldn't imagine at the time people going back to movie theaters in droves, because one, it would just take too long. And then one or two, the cost of going to a movie theater is like going to a ball game almost, and like if you have a family of 5 or whatever, like that's like $100 night. And I wasn't sure what people's employment or like discretionary income was going to be. And then just, kind of what we talk about in comic books, like the people have really nice movie theaters, or like just entertainment areas. Like I have a bunch of friends that have like movie theaters in their house that they have like 8 different seats, and they'll have parties. And I just was like, man, there's no way this stock's for 15. And sure enough, per my slide, I mean, the diamond hands people pushed all the way to 60. Now I looked back at the actual all-time high of AMC back in like 2005, or like, I can't know the exact date. 2008 maybe was when it was. And it was $30 a share. And that was at still when movies were still affordable. There's still box office records, and people were going to the movies in droves. And just the uncertainty of how people were going to go back to movie theaters, I was just like, this is malarkey. This is ridiculous. And as of today, I mean, I was right. $5 a share, May 2023. And actually, I think that's still over where it should be. Kind of your tell was the CEO wasn't talking about growing the company. He was talking about all the support he was getting from all these diamond hands people. Now, what did he do? He ended up issuing a separate kind of investment called $ape. So meaning you could actually buy like a different entity of AMC to basically kill the short sellers. And I don't know what he did with the money, but obviously he didn't do a very good job, because
Didn't change anything about the model.
Supposedly they like consolidated and like offered more like, viewings or just like options. I've been to the same AMC here in Linwood or Seattle or whatever, and there has been no changes to that arena or anything. There hasn't been more offerings. There hasn't been remodels. I'm sure there. I've never gone to a sold out like premiere of anything lately. So, I mean that's shady stuff, and it's legal, which is even crazier, right? So,
Well, he thought they
um,
were funding his retirement plan. That's
probably, man. And I haven't heard from him since. But like when a CEO says like, cheers on investors and not their actual customers, that's a big sign that you should get out of the company. And he tweeted that out too. So anyway. Oh, yeah, wait, that one is still there, and that's still my favorite. That is still my favorite movie theater in Seattle of all time. It's so weird. Um, the bathrooms are on a really weird side of the movie theater, and like I don't know, it's hard to explain, but it's like 4 stories and it's good. There's an AMC movie theater in this old mall, but I prefer that one that Wade's talking about in downtown Seattle. Let's see here. All right, our next slide. We got 3 more left. And yeah, we got 6 live. Thanks everyone for stopping through. We were at 7 at one point, but 6 is great.
very cool. Thank you.
Thanks everybody. Yeah, it's like 3 stories. It's not 4, it's like 3. So GameStop, you guys all know. This kind of started the whole craze. Now, this kind of had your, I guess you call like your triple kind of threat here. So GameStop, obviously, you guys all know they sell video games and do used stuff and have franchises. It's the place to go to get, video games or whatnot. Well, the company before the pandemic was coming on hard times. They were competing with the big box stores online. They're really trying to pitch their used video game market. The founder of Chewy, or I believe his name is Ryan. I can't remember his name, but he had tweeted that he took a 5% stake in GameStop at around $20 a share. And at that point, the stock moved from like about $20 to about 45. And I GameStop to me, and I'm sure people can attest this as well, is that GameStop started the whole let's kill the big guys and like let's start buying up companies and force these short sellers to basically close doors. And it was good in thought, but it again, it was one of these crazy, like unfathomable, this company's not worth $450 a share type of things. I remember going on YouTube and there was this kid who had like 100,000 views on this video and it was crap. It was a really bad video. And he was saying why GameStop should go to $1,000. And I remember commenting and saying like, if GameStop goes to $1,000, the world economy, that could be an actual really bad thing for the world economy, because those banks, unfortunately, how it works out, those investment companies that are shorting GameStop or hedge funds or whatnot, they have connections with the big guys, and they're always going to get bailed out. I don't know if it would have gone that bad, but it would have definitely, if GameStop went to $1,000 a share, there would have been a lot of pension funds. There would have been a lot of retirement funds that would have been hurt by that. As odd as that sounds, because of the functionality of how stocks work. Now, the highest I ever saw it get to was 4.25, and I probably bounced it like, I think I got in like 120 and sold it like 300. It wasn't a big amount. I just wanted to just see. I bought like 10 shares of it, but to say that GameStop was worth $100 billion or however much the valuation was, is just ridiculous. And I'm sure, Brad, you probably saw a bunch of just craziness with GameStop and on Twitter, Instagram, and like Diamond Hands. Like this company was just crazy.
I was really intrigued by it. I watched the there again, kind of late to the game, but I watched the documentary about it, and like Robin Hood's involvement, like Wade's talking about, Robin Hood's involvement in interestingly being a part of it and kind of shutting it all down. But is that where To the Moon came? I mean, was that where it originated?
I mean, basically, yeah, like To the Moon is kind of where it all kind of came through. And again, whenever you're investing in a company, like, does it make sense to be a 500 billion or like 100 billion dollar company selling video games? And the other big thing too was GameStop supposedly was going to come out with its own NFTs. And so that was what really like kind of drove up the next kind of leg up, you know? And I mean, who knows if GameStop eventually one day comes up with like an NFT that changes the world? Sure, that could be a $500 stock. Who knows? But the reality of it is they're still selling video games. They're a better run company than they were before. I think out of all of these companies that we're talking about, GameStop probably has the most, I would say, current model to make money for a company. They still have a loyal, like, consumer base. It's still fun to pre-order from them. I tried pre-ordering that Zelda game and it was sold out. So I mean, they have people going into the store. Um, it's $24 a share. Would I buy it at 24? Probably not. And it's split adjusted. So they did a split earlier. I keep saying but anyway, yeah, GameStop. I was definitely the one company that I still have a little bit of faith in. I don't own any shares in it anymore, but definitely compared to these other ones, I have more faith in GameStop
My
for
nephew
some of
has
the ones.
always and still loves going there.
Yeah, it's a fun
Like I
place to
think
go, right?
it's yeah, I think its supporters are like really they're really involved in it. They really like it, and he would go and like get games, beat the games, take them in, trade them in for other games.
Hmm.
So his whole commerce when he was younger was to to kind of work it that way, and he's always been a fan of that. In fact, he takes his daughter there now. They enjoy going together now.
There you
So they're
go.
still he's always been a part of that.
Yeah. Yeah, I mean, I still, like I said, I went there the other day and I returned my Zelda game that I didn't buy, but they're great customer service. They're online. I think they could really do some things with online. And yeah, and I think what's really hurt them a little bit, just in general, is what Renee is saying here is he just doesn't go there as often as he used to. A local spot near the castle is kind of like them too, just different. And I think um, what they're getting hurt by is like kind of these like niche kind of collector type video game stores that the dudes are just like super nerds and they're not very corporate, and so it's more of an easier place to go. um I think GameStop's more for like the, because I remember way back, it used to be Software Etc. It used to be Games is some other place, and then they got bought out. I don't know if her name remembers Software Etc. But um and then with the online kind of like the online, which is what Wade, I think Wade and I are sharing like a wavelength here. You can buy games from your couch, and so you don't really that nostalgia of like going to the store and like trading in. That's gonna really have to keep on going. Hey, what's up, James? Every single one of these was no better than gambling on investing. Yeah, that's kind of what we're talking about today. And Renee knows what I'm talking about. Software, etc. Yeah, all those spots, man. So I'm talking like I'm a big know-it-all with all these stocks and like, oh, like, haha, look at these idiots that bought stocks in these. These next two, I did buy stock in. Archer Innovation was probably the dumbest move I did out of all of these meme stocks. Have you ever heard of Archer Innovation?
I have not. I was just reading the your explanation below there about it. I've not heard of that.
So there was this time GM came out with an earnings report and they had this big presentation, and it like I swear everyone was just honing in on this presentation by GM. But they basically were saying like we're going to convert a lot of our energy and research into developing AI or self-driving and electricity before even AI was kind of a big thing I guess today. And they presented these like self-driving cars and like a self-driving helicopter, and it was very exciting. Like it got me really excited to just look into these different companies. Well, at the time, there was about 4 or 5 other companies trying to get into the self-driving helicopter taxi space, which sounds so futuristic, right? Um, and Archer Innovation was the company that I thought, wow, they could really pull this off. It's basically this black, like it looks like a Tomahawk, smaller Tomahawk helicopter, and their pitch was have you ever tried getting from, one part of Manhattan to another in 5 minutes during rush hour? It's nearly impossible, right? Because of all the traffic. Well, obviously, New York City has all these skyscrapers and all these helicopter pads. Well, all we have to do is create a helicopter, step one, that drives by itself, step two, that is fueled by electricity, step three. Oh, and that can, will pass FAA regulations.
Yeah, intuitive, like navigating.
Yeah, and all that stuff, right? Let alone it's in the freaking air, right? You know what I mean? And I was like, huh, yeah, I could see that happening in 5 years. No, that's not like you can't even
That's
get
some Blade
drones.
Runner stuff there.
I know you can't even get a drone to deliver an Amazon package
That's
without
exactly what I was thinking. That's
and
exactly.
let alone people, And so my dumbass was like, yeah, I'll buy, 100 shares in it. Now, sure enough, like only bought like 100 shares. I bought at 11, sold out at like 9 because I was like, this is stupid. Like again, I looked back at it and like you gotta pass 4 different, industries and then regulations. It's just gonna take too much time. It's now $2.32 a share. I would say, like from the excerpts and the press releases from this company, it's so interesting on what they're trying to work on. I don't know if that'll actually ever happen, especially with work from home and all that. But it was a fun company to kind of follow.
Self.
What
Would you go in a? Would you get in a self-driven helicopter?
and so that was kind of like my like thought process. I'm like, okay, even if they beat all those regulations, right, and FAA and all that stuff, like I don't think I would, especially after rest in peace, Kobe and his daughter. I think that's what really like killed the company. Was was that
Oh
and
yeah. Well, I
and
was going
and
to say all it takes is one. I mean, one accident, and you're done. I mean,
yeah,
you
right,
couldn't afford to have one accident. Yeah, I was just reading James Kreider's comment there. We don't. That's why his screen name is Brains on the Discord for sure. That's
yeah, definitely,
yeah.
yeah.
We appreciate the comments, man. That's good stuff there.
And Wade, maybe I don't ever like to recommend stocks, but I would definitely, I think, following up on this show, would recommend what to look for in a stock or what's worked out for me. Because I never like to get in that like buy this and then like I'm wrong or like I'm right and then they want more, that kind of thing. But I don't
Yeah,
know.
where's our ticker?
What's that?
We forgot to do our ticker.
Oh, we could put in there. Yeah. Yeah. Here we go. Yeah. So again, this is and we're not recommending to buy or like we're not calling you assholes for buying this stuff because I mean, like I said, like I bought Archer at $11 and sold it at 9, so I was at a loss. Now Lucid, I personally am invested in this company and I bought pretty low. Um, Lucid was pitched as the Tesla like killer, quote unquote. Now, I don't invest in companies that are killers of like the number one dog. It may happen. I mean, who knows? It's a really sick car. Do they have a Lucid shop in South Carolina?
I do not. Well, not in the Midlands.
Do
I'm
they
not
have
sure
a
that they.
test? Do you have Tesla though?
There's a. I'm pretty sure there's a Tesla play. You would probably see Lucid more like Charleston area. I
Okay.
would think. Yeah, probably more down there because they've got a like a Ferrari store down there and
Yeah.
stuff like that. So
I mean, it's really hard. Like car companies are like the hardest like companies to make money in because of you have to spend so much R&D and then you have to like if you're trying to do a vertical integration versus like horizontal integration, like you have to invest in everything. You have to make everything perfect. Oh, Renee, yeah, I did check out the Lucid one in U Village. It's pretty cool. The car to me is like if I had 120 grand, I would buy one definitely. Um, it's a sleek car. The interior is awesome. There's a lot. I think it beats Tesla, right? But it's Tesla has so much going for it. Like it has the infrastructure, it has the brand, it has the guy behind it. That's the thing that Lucid kind of lacks. And I think when the news came out that the big thing that separates Lucid from Tesla, whether they have personal preference on the way the car looks or brand, is that the charge for this car is like 120 150 miles more than a Tesla S or Tesla whatever model that is. And I talked to a friend. This is like when you like talk to someone like, oh, you have insider info. He said that the engineers at Lucid are far more superior than the ones at Tesla. In fact, Tesla tries really hard to recruit Lucid engineers to help with their technology. But the Lucid engineers are very loyal, and they're like, no, we don't want to work for Tesla. Whatever reason that may be, they're just very loyal to Lucid. The problem with Lucid is they're trying to sell a car that's 160 grand, like Renee was saying, and they're trying to penetrate a market that's already kind of established by either GM, Tesla, Ford. So like a company that, companies that have been established for longer, and they're bleeding cash. The one thing they have going for them is the Saudi investment fund is like, we got you. Don't worry about it. Just make the car, basically. They have a factory in Arizona that, so I'm sure one day, hopefully, they'll have one in South Carolina with, your guys' EV push. The technology is what sells me on the company. They probably got about 2 years left. The rate they're going, they have about 2 years left of cash to pay engineers, the building expenses, what have you. I don't know how much more money that the Saudis are going to invest in the company, but they're in dire straits right now. It's kind of a gamble at $6 a share, but this stock was trading at $60, which is a valuation of like 150 billion.
Wow.
I mean, and at the time they hadn't even sold any cars yet, but and James, I mean, you work in the car industry. Yeah, Tesla does actually lose money on their auto sales, and it's the carbon offsets, it's the upgrades in the cars, from what I know. And yeah, EVs are money losers. I guess it's just a question of like, how long can you sustain that money? Amazon was losing money for a very long time, and now they're, second biggest company market cap in the world. It just took them 20 years to get there, that kind of thing. Have you ever like thought about buying a Lucid, or like watched a YouTube video, and what are your thoughts about the car itself?
Until it hit locally, like, in our kind of I don't know, our sneaky first first show that we did on your channel.
Yeah. Okay.
We kind of talked about that, and until it hit close to home, I really didn't think it was feasible, because I was concerned about some of the environmental issues and stuff like that with batteries. But then, I did some research because I had to be prepared to do a show with Ferd. So, and come to find out that part of our push here in South Carolina with the EVs is that there's 2 facilities being built to recycle old battery components to use in the SUVs that are going to be made in the Scout plant in just north of Columbia. Mm-hmm. So I thought that was kind of interesting. So I've never thought about it in general, just because I didn't think it was, it's one of those things that sounds good, but then you start digging deeper and you wonder if the benefit, if the effects or negative effects don't outweigh the benefit of actually using. So, but I'm a little more encouraged by it after seeing, the local push here.
Yeah. I think the biggest thing with like electric cars in general is like, if I drive this far, can I recharge? Or like, how long do I have to find another charging station? And I think Tesla does a really good job with like releasing the anxiety of that. That's one thing they're very good at, and it's taken them a long time to establish that. I just hate the interior of a Tesla versus this Lucid. The Lucid is so much fun. It has so many gadgets and stuff. I'm an Apple like fanboy through and through, and I would love like some type of collab with Apple. that's just me as a fan. Again, I don't have 160 grand to spend on a car. I'm still trying to build this house up to where we want it to be. But I definitely would buy a Lucid over a Tesla. Just because of the technology. I was sold on it when I was talking to a friend of mine. So
it would be interesting to see how many companies have been successfully dethroned the number one in their
perspective. Yeah.
Right. Yeah.
Yeah.
How many have successfully done it?
Probably,
And
I would say Apple probably with the smartphone.
yeah,
I mean they killed semiconductor and cell phone market in Northern Europe. Because Ericsson, Nokia, like who you they're gone. Like those companies are just done. And then that was like their economy. There's a big YouTube documentary about how Apple has killed different economies with like cameras and like it's kind of
wow,
funny, but
that's interesting. Or like
yeah.
Facebook with MySpace. Like MySpace was the only real social network at the time, and Facebook comes along and like they got complacent, and Facebook came along and kind of dethroned them back in the day.
Yeah, I remember I stopped using MySpace because it took up too much download time. And then a friend was like, "Oh, you should try this Facebook thing now. It's just like MySpace." And I was like, no, I'm cool, man." And then he was like, "No, but it's cool because you have to have a university email." And so it's just basically a bunch of kids. And I was like, "That's awesome." So like, yeah, that was the
So
big
you
thing.
were like, that was super early. So you were like on the really early, that was the early stages of that whole thing.
Yeah, dude, I was very anti Facebook. I was on Facebook before you could say where if you were in a relationship or not. That's how early I was in it. Like it was like
Wow.
beta testing, yeah. And
Was it the Facebook then?
it was the Facebook. Yep.
Okay.
Yep.
All
It
right.
was
Yeah,
the
you were like
Facebook.
super early then. That's
Yeah.
cool.
Me and Zuckerberg are the same age, so we're kind of that weird in between Gen X, Gen millennial type age. So
That's pretty
a-
cool.
anyway. So we got a lot of, I would say, pushback, but questions about why this is in 2008, as far as real estate market is concerned. And James, I'm glad we have kind of a different. James probably seen this in the car market. I know on our inaugural show, he was talking about how some banks have actually left the car loan business, and I know here a lot of brokers have either laid off people or banks have laid off just departments and whatnot, but we're still hiring, LOs and mortgage brokers because they need those transactions to go through to keep them afloat because that's the bread and butter, right? Kind of going off a tangent here, but we kind of touched on it last week, and why this is in 2008, and kind of, I guess in some I've heard people are kind of hoping it being 2008, which I don't really get, because 2008 was a very bad time, I think, for a lot of people. um it's weird. It's weird that supply and demand hasn't really gone down because of the cost of buying a home is so much more, until you look at the factors that we're going to talk about now. And Brad, you are definitely seeing a tick up in demand for sure, correct?
That's right.
Um, and what is it? What's really yeah, I know, sorry, I got a little tickle on my nose there. What's really pushing your like clients like to buy a home? Is it necessity? Is it just want to, or is it fear? What is it?
It's necessity. I would looking at the buyers that I'm working with. There's one relocating here from New York.
Mhm.
Um, Kids are out of the house. They're going and building their own lives, so they're relocating here to be closer to some extended family. So I told them, go ahead and sell the snow shovel and get you some flip flops. You'll wear those like 10 months out of the year,
That's awesome, man.
and Yeah, in fact, I was laughing when you were like, "God, I'm sweating, man. It's 70 degrees here." And I was like, that's a cold spell for us. Because in the summer it will be, I mean, I've shown houses and it be triple digits.
Oh my gosh.
And the
I kind of
humidity is
want that, kind
terrible.
of don't.
Well, it's here's how we combat that. We stay close to water. We've got a
Mhm.
huge lake here that's beautiful. Just move here, buy a boat because you're
Okay.
going to buy the house for cheaper. Move here and buy a boat and spend your weekends on the lake. Um, but but yeah, it's I would say it's out of necessity. I've got another client who is renting at the time, and just kind of understanding that, hey, I don't want to, I don't want to be paying somebody else's mortgage. He's renting I think he's in an apartment, but I've got another, if you're renting a house around the university, I mean, you're paying somebody else's mortgage. So
Mhm.
just wanting to kind of get out of that. So it's all necessity. I don't think there's all my folks have a legitimate reason. Um, and as soon as they find a suitable property for them, they'll pull the trigger.
Um, and like from my side, from the financing side, we're not really seeing a lot of the things that happened during the 2008 crash. Most importantly is defaults on loans. I mean, people are definitely like a little more strapped because of inflation and the cost of, variable type loans. However, back when we were refinancing people in 2021, 22, they were saving like 400 or $500 a month, and their equity in their home was increasing by the month. I mean, it was exponential. And they were either really conservative with borrowing against their home, or they were just like, hey, I'm set for the next 30 years. I'm not going to leave this house, because why would I leave this house? I have a small rate of like 3.5, 4%. And if I left, I would double my house payment, probably get the same house. I don't have to leave. And back in 2008, the reason people left homes or didn't pay their mortgages because they didn't have a job, and they didn't have and their rate was variable. So there was a lot of fear. And I think the home buyer or the home owner right now, as long as they have a job, they don't really have anything to worry about. They're very well cushioned as far as the money they have in the bank, and they have a fairly good job at this point. We don't know what's going to happen in the next few quarters, but I mean, you and I are probably in the scariest, like, honestly, like, I'm just being honest, like, we're probably in the most like worried industry out of any. And I think we're doing okay. We're not going game busters, but like, I put away quite a bit of money like during the pandemic just because I didn't know. I don't know your financial situation, but like, I just gotta assume that, we had our best years for 2 years that we may never see again. But it doesn't necessarily mean that the demand is still there to buy homes like it was 4 or 5 years ago.
Well,
Um,
I mean, that time frame is gonna seem really crazy compared to normal. I mean, we were talking last week about and we'll see some slides that illustrate what we're talking about here. But a healthy average market as far as supply is concerned is about a 6-month supply. And right
mhm,
now, nationally, this is true here too,
mhm,
where I am, a 2.5-month supply. So if they didn't build another house for 2.5 months, there wouldn't be any houses available.
mhm.
So you get um, for it to get back to what they consider average normal, it's going to feel weird I was telling an agent in my office today, it's going to feel weird to get to that point where there's a 6-month supply. It's going to feel like we have way too many houses when we're just flush. We're just back to normal.
Yeah, and
Um,
and like population, like you stated, or I don't know if you say this or I read it somewhere, but 2008, the population of the U.S., I mean, it's grown like exponentially since then. I mean, I think it was like in the millions. I don't know the exact amount, but so there's more people in the U.S. that are still here. That whole notion that people are leaving the U.S. because of like whatever reason, it's just not there. and immigration. I think the US is now, we're more service based, and so like here, I do a lot of loans for people from like South America or from India, because my they're programmers that go to really good schools in Southeast Asia. They come here and they're like the best of the best because it's the US. And the concept of like an immigrant who moves over here is like, wealth is within housing. That's your easiest path to wealth, right? Because the average 3%, whatever. But like, especially in America, it's it's in other countries it's not so much, but still, but more so in America, right? Whether it be Idaho, Montana, Washington, wherever, and the other thing too with the housing crisis in 2008 is it was a free for all, which kind of what James is kind of alluding to. He asked, "Are you seeing lenders tighten their lending guidelines? Auto loans are definitely getting harder to get, and under 720 beacons are definitely getting treated as second tier." Yes, we are. I couldn't do a loan for a client today because their credit score is under 720 for a HELOC. Now, you can still get approved for a loan at 580. You're just not gonna really you're really gonna have to make a lot of money to afford that loan. But yeah, there's been tightening because the money supply is less. There's just not enough money to go around at a certain rate. I've been talking about our market updates about the debt ceiling being a big deal too. And so every kind of borrowing market, whether it be bonds, whether it be HELOC, whether it be mortgage, it's just really high. But the demand is still there. You're not seeing excruciating demand of like 20 people trying to find a house. At least on my side, it's more like 5. But they've been looking for 2 years, and again, it's just with the supply that you're talking about. It's like a 2.5, like here, it's a month supply, and that hasn't changed in forever.
Wow.
We saw a house go for 380. It was a 2-bedroom, 1 bath, and it had some land, but it definitely needs like an addition or something. It sold for like 350, 380 in a matter of 16 hours is what they said. Technically, it was 16-hour listing.
What was the list price? Did
350.
Okay.
So they went 30,000 over, all cash offer. My client, she couldn't even get pre-approved in time to even put an offer on the home. Yeah, and so I mean that's a very interesting case because like I feel like it's a builder that's going to just get demolished and put townhomes. And the other thing too, like what you're kind of alluding to, is like builders can't build fast enough to keep up with demand. So that's another kind of unfortunate thing, is that the margin for builders. I mean, if you're a builder on a home, like the margins are so thin, you really have to price it well, and so the cost of labor, the cost of materials, it all eats into your margin. And like if you're selling a $700,000 home, you're only making like 30 grand on that house. It's kind of scary. But yeah, we're having issues too with building and builders not building fast enough here. Are you guys having issues as well?
Yeah, I was going to say my folks from New York are they're still waiting for final approval to break ground, and it's been at least 6 weeks, if not month and a half, 2 months since they got it under contract. So they're still waiting for that final approval and I don't know, I meant to I'm gonna have to call the guy tomorrow and just see, is the approval internal? Because sometimes if the builder company won't let you have to have certain maybe you've crossed the threshold. There's one exit from the neighborhood, and in order to build more houses than what's allotted for one exit, you have to create another exit, and then you can continue that phase 2, if that makes sense. That there's only a certain number of houses you can build per exit from the neighborhood entrance and exit. So I don't know if it's related to that or if it's a
probably
county, just a county thing. They're waiting on the permit from the county to come through, or what exactly. So I need to get a little more information on that. But yeah, we're seeing some of those issues, and a lot of them are actually. So I had somebody who was building kind of tail end of the pandemic, and there were some things that were wrong, and at every step there was something else that was going on. Something they couldn't get garage doors, they couldn't get breaker boxes. She closed on the house without a glass enclosure around her shower, and had to, like, she was going to have to use her guest bathroom in the interim until those came in, because they were like, hey, we don't know when we'll get them. We'll install it when it comes in, and we'll make sure we write, they wrote up an addendum to make sure she wasn't going to get stuck, but she had to. And I told her, I said, it was frustrating for her. And I said, look, I get it, but here's the deal. Because of when they started, when they finished, I said, if you were that unhappy about this house, we'll close on it. I'll turn around, put a sign in the yard, and I'll sell it for $60,000 higher.
Which you probably could get, right?
That's when, and she just kind of was quiet, but that's where we were, because phase 2, I said, here's the deal. They can't build your house in phase 2 for how much you paid for it. So don't be too upset. You haven't moved a piece of furniture in it yet, and you already have $60,000 in equity,
Yeah.
So and that's why that, I think that kind of hurt builders. Now, I'll tell you an interesting thing I saw. I have an older couple that I'm trying, they probably need to sell their house, but they have they're really connected to their current house. They don't want to have to move, but it's a little tougher to navigate. It's like a tri-level, and going up and down stairs just isn't a good idea. They really need like a nice 1-story. And so I said, well, new construction might be a way to go. So we go to the model home at one of these builders here locally, and on the board they're offering, now I don't know the particulars, I didn't see the fine print, but they were offering 3.75 interest rate and $10,000 in incentives if you built with this builder. So I don't know if they were going ahead and buying down the rate, but that's a lot of buy down to get to 3.75 from where we currently sit.
So I wonder if it's an arm. I wonder if it's adjustable arm, like 3-year term, but still that's phenomenal. Like, great. I would be really curious.
Yeah. So the lender that I work with here on like traditional stuff, he said, if they're going new construction, I can't compete. I mean, it's like,
it's almost like a slam dunk. Like, if you can sign, if you're a bank and you can, if you're a lender assigned like a new construction, you just sit back and wait till those homes sell, man. It's really easy to get that business, unless someone's just very loyal to another mortgage broker, which they're not, that's insane. I would be really curious to see the fine print on that loan.
Right. Yeah.
And even if you're buying down the rate, like if you're the builder, like you have to find a market that will allow you to do that. And there's certain limits to where you can do that. Whatever. I mean, I'm not.
There could be. I mean, that lender could be leveraging that. Okay, I'm doing 60 of these for you, so we don't need to make as much per loan. We don't need to make as much per loan because we're doing that volume, and getting out in front of. So yeah, I'll see if I can track some down. I was shocked. I mean, that was jaw dropping kind of numbers to see that.
Yeah, that's I really have I can't think of anything. Yeah, and we'll, kind of our next slide here. What else is kind of affecting why this is in 2008? We kind of talked about the population growth, and regulations are really strict. I mean, there's no more no income, no asset loans. We used to call them NINA loans. Essentially, you could just basically say, "Oh, I make $40,000 a month," and the mortgage broker would be like, "Cool, here's $1 million house. Probably work at XYZ store. I don't care." And everyone was drinking the Kool-Aid and just kicking the can down the road and having a good old time. Those days were gone. There are no such things as NINA loans, and everyone thinks, oh, it's because the government helped and like there's a regulation. Yeah, but it's more the investor appetite was like, yeah, we're not gonna invest in triple C, credit, and we're gonna make sure that these loans are actually for like well-versed, clients that make good money, have good credit score. It's not harder to get a loan. It's just harder to qualify for a loan that you can afford, I guess is what the reality is. And it's harder to lie about how much money you make and how much assets you have. There's more documentation required than there was before. However, with technology, you can get those things verified quicker, but 2008 you couldn't. You could definitely game the system a lot easier back then. I think what the unfortunate thing too is that things got lost in translation with a lot of people that maybe have English as their secondary language, and a lot of people are taking advantage, quote unquote. The unfortunate thing is they signed these documents, um, and they were hurt 7 years down the road. But maybe it was a good lesson for those people that didn't really understand the whole process to now, like 7 years later, when they can actually get a home and qualify for it, they'll be better. They're better educated in that whole deal.
When you look at the whole process too, like it's not just the taking your word for, taking the borrower's word for what they earn.
Mm-hmm.
It's all because in order for that to happen back then, you also had to have an appraiser who said the house was worth what they were paying for it. And I kind of call it like drive-by appraisals, where they would pull up in front of the house, call the lender and say, all right, what's the contract details? Where do you need this?
What do you need? Where do you need me to be at? Yeah.
And so those relationships are gone. I mean, now just so the chat knows, and I'm assuming you guys do it the same way, but it just goes into a general pool and it's randomly selected who the appraiser is.
Yeah. I can't, if I talk to an appraiser, like if I call and say like, hey, is that appointment now yet? And I talk directly to an appraiser, I can lose my job. It's that strict. And we had a couple people actually do that on accident. They didn't know, which is, dumb. But we can't talk to, we can have zero contact with them. It's a very big deal. Dodd-Frank type stuff. But I think another important thing too is foreclosures are like few and far between, unless something really went bad. Especially here in Seattle, we never have foreclosures. Everyone's paying their mortgage, or they're not. Or if they aren't, they're not letting it go to foreclosure, because when it all comes back to is the equity in their homes. You'd figure out whatever I need to do to like not have this house, or they'll sell it and they'll run away with the cash and be gone. There's so many, and I'm not saying that like if we start to see like Microsoft, Apple, like these big companies, Walmart, even like just to start laying off employees at like in droves, then you'll definitely see a supply increase, I'm assuming, in the real estate market for people that can't afford, whatever. But as of right now, it's just the data's not there yet. Or if it's ever going to be, the data's just not there. So we're not necessarily saying like 2008 is not going to happen. The real estate's like fine. It's a fine investment. Go buy a home. We're just saying that the data as of right now just shows that home prices are still increasing at a pretty normal rate. There's still a healthy demand for homes. Loans are still pretty good. There's no defaults as of right now, and employment is really high. And I think what trumps everything is that equity in homes is still growing at a very high or consistent pace, to where it's dumb for you to not make your payment and lose your house. Whereas in 2008, it was a smart thing to do. That's just kind of my point as of today. So thanks for the question. Thanks for that topic. Whoever asked, I forgot. I think it was Blade Builder or Mike. I can't remember, but someone had requested that topic. You were going to say something, Brad? Sorry.
I was going to say, if your Walmart is anything like my Walmarts, they need to hire people instead of, they're not, there's never like enough registers open or anything.
I know.
That's it's clear. And I think the slides that we were looking at this week, is that in my section?
Oh, this is my section, and then you're next.
No, I'm saying like the slides that we have, is that in the more you know? The graphs. I'm sorry, the graphs that were.
Oh, yeah. I was gonna put those in the more you
Yeah.
know section.
Okay.
Yeah.
Cool. So I
Uh,
guess we can still use the more you know. I think we're okay. We haven't been. NBC hasn't shut us down yet.
no, we're still good with the more you know. Let's see here. And would you be able to send me those graphs in the private chat?
Yeah.
I'll do my credit thing while you do that, and then
Sure.
anyway, sorry.
It's just to reinforce. I mean, basically
Yeah.
reinforce and like visually show you exactly what we were talking about. So I'll tell you what. Why don't you do your thing? I'm going to track down the link. That'll be the easiest way.
Okay.
I had them individual so we could drop them in, but that's fine. We will. We
Yeah,
can do it this way.
my Instagram for our show isn't set up on my laptop, so it's really annoying. I do apologize, but
That's all right.
so your credit tip of the day. I like to do this just for people because it's the more you know kind of thing, and just it's good practice for everyone. So not everyone's going to be able to like buy a house or like buy a car like right away. They may need to take time to do that, whether that be their income or more specifically what I'm talking now about right now is their credit. The one thing most important when it comes to your credit versus opening a card, using it, having a mix of credit cards, whatever, is to pay it on time. I don't know how many times where I've had someone just like call me up and they got great credit, but shoot, one time they forgot they had their Nordstrom bill or their Target bill or their Citibank, what have you bill is late, 30 days late, and it kills their credit score by 60 points. And there's no way to get around it. You have to wait. They allocated I think it's like 5 years or whatever to get, rid of that ding on your credit. It'll go away after time, but just set up auto pay on all of your stuff. Just do minimum auto pay. That way you don't have to worry about it. Things happen. I mean, I know that's how it is, but I've had pushback from people like, isn't like the credit rating agency is going to like change that? I don't know. I don't have the power to go to Washington, D.C. or to knock on these credit agency doors and to suggest that. I'm sure they get it for everybody. But as of right now, they're not going to change that stipulation on the effect on your credit score. So just do yourself a favor. If you have an issue with this, just set up auto pay or just pay your bills on time. Just have it organized. It's the easiest way to increase your score. It's going to have the biggest effect on what your credit score comes out to, whether you're buying a car from James, if you're buying a house from Brad, or need a refinance from me. It's just the easiest way to help you in your credit kind of situation. Brad, have you ever ran into this situation before?
With a client or
or just
personally
in life.
or
in life or whatever.
Yeah, I actually personally, I had gone to the doctor and I did the copay and there was like a $35 balance and it said go to the website and pay it. So I went to the website and it says my balance is zero. So I ended up getting a letter that said this is the final notice, and I realized that wait, it's zero because you have to enter in the invoice information so it recognizes. I thought there was an error because I paid the copay and had paid some cash while I was there. So I thought I'd already taken it. So those types of things can come up, And then I've had clients who, this has been quite a while ago, but I had a guy, this couple was moving here from Michigan, and the guy's like, we pulled it and we're trying to figure out like I don't remember if like his credit wasn't as good as hers or something. So do we just use her or what, all those little hoops you jump through. And I said, well, what happened? And he's like, listen, I get paid every 2 weeks. They'll get paid when I get paid. And I was like, no, you can't do that. You can't have that mindset. Like, that's not the way it works. So I think they ended up having to wait a while to like let that cycle through. It wasn't quite, we ended up fixing, getting everything fixed. And that's where having somebody good at what they do, like yourself, like get on track. Don't just assume you can't afford, or don't assume anything.
Yeah.
Go ahead and talk to an agent, talk to a lender, and let us help you get on track and point you in the right direction.
Yeah, I don't think
Yeah,
that lenders I don't think I've ever like been like upset at someone asking me something about their credit. I'll probably get annoyed if like they keep asking me like credit questions that don't make application because I can't give them an answer. And so I sound kind of redundant, and that is annoying to them too. So I think a lot of people
What's
try
the
and
biggest reason they don't pull the trigger? I mean, if they're asking you the same question and they don't do an application, what is the biggest
the
in
assumption
their
that
mind?
if they apply for credit, that's going to hurt their credit. And initially, yeah, there's like initial like reduction in your credit score, but I can't extend you a dime unless you run your credit anyway. So it's kind of like, are you really serious about buying a house, or are you really curious about it? Because it doesn't cost any money to make application. It all does is cost your time. So it's the always the pushback is like, I have to have a perfect credit score, and you don't have to have a perfect credit score. Um, you have to have a pretty good credit score, but there's always like, well, your credit score is this, or your credit profile is this. I can't offer you that, but I can offer you this, or I can't offer you this today. However, if you do this or that, you can buy a house in 6 months, that kind of thing.
Right.
So I think it's like, that's the pushback I get, the assumption that I have to have an 800 credit score for the best rates. It's not. 740 is the credit score you need. um Best credit interview answer ever. I was asking a guy about late payments. He said, "Oh, we'll wait on the answer." But yeah, auto pay is like the way to go, in my opinion. Well, James, we'll wait for your answer on that. I'm actually really curious about that. And it's I don't care about people's. I'm not gonna ever beat up somebody if they're like, I missed a medical payment because I was going through some stuff. Dude, stuff happens, man. But like, let's figure out a way to like help you, and that's what we're here for. I love helping people that just think they couldn't afford a house, and then like they get a house 3 months later. I mean, I'm sure, Brad, you feel the same way too. And I think people talk, they try and outsmart, like they try and outsmart the process, where it's very black and white in some cases, or they're not black and white enough in areas where they can be kind of flexible, that
Well,
kind of thing.
you and I have talked about this and feel the same way. There's nothing more. It's great to sit at the closing table with them, and if you've overcome more, it feels a little bit better. Like
Mhm.
really just reflecting on what you had to get to. That's that's
I
hilarious.
put all my bills in a hat when I pull bills out until I'm out of money. If they banks call me, I tell them they're not nice. They don't even go into. Well, he
That
probably didn't
is
get a car that day, or if he got a car, he probably had it for 3 months and they repoed it. You know what I mean? So
Yeah, that's what's surprising about that. I mean, if you don't pay the bill for your car, they'll just come get it. I mean, a house is a little bit tougher.
yeah, yeah. I bet the car companies love that, because then they'll just sell the house again, or they sell the car again,
Right.
and they're fine with that. So yeah, you had some graphs here that I thought were really great for what we're kind of piggybacking on what you were talking about earlier. But so this kind of affects, I guess, me as far
If
as
you
regulation and stuff,
Yeah,
right?
click that blue button and it'll just pull it up
Okay.
a little bigger so you can see.
Can you see it?
This was really fascinating. Yeah, yeah.
Okay.
This was really fascinating to me.
And so what is this exactly?
So the regulations, so
Okay.
historical data for mortgage credit availability index. So
Mhm.
during the housing bubble, it was considerably higher to now. So back out and double check like the text just before this. Like, yeah, just close. Um, it's harder to get a loan. So it's showing the how much easier it was
Mhm.
back then. Things are different today as purchasers face increasingly higher standards. So the standards were lower, so more
Yeah.
loans were were issued then. But I like these graphs. I'm a visual person, so it really
Sure.
helps to take a look at this stuff. All right, so time it took for unemployment rate to recover to pre-crisis percentage. This is probably like more unemployment during the let's see, this is during the
Pre-crisis.
pandemic compared to this is more like a you thing, I think.
I see. Okay, so Great Recession, unemployment, or it looks like,
How long it took to recover from from an unemployment.
yeah.
So
So
the red, yeah.
during the pandemic, it skyrocketed, right? But it dipped really fast, like very, very quickly. And then during the Great Recession, it took 9 years versus 2. Looks like. Is that what I'm reading here?
Yeah. Yeah.
Yeah,
A lot longer to recover. And
sure.
then, ours is, this recently it was much quicker.
Yeah.
So wait, I'm curious why you feel bad for people buying houses now, especially in light of the last hour and a half.
It's probably, I mean, like, Wade's probably coming at it from like it sucks to be in this market because the cost of a home is a lot more than it was before. But if here's something to think about too, and I do kind of feel bad for people trying to buy a house. I mean, it's tough, but if you wait, if you do wait, like if you are in the, if you are not in the like, I'm gonna, well, because I had to put 500 down and sign my name 30 times. Okay.
Those days are yeah, those days are gone. That's
Yeah.
that's yeah, if you if you're don't bank on that ever happening
Yeah.
again. Unless it's like, I don't know, maybe owner financing or something.
I mean, there's some programs you can do down payment assistance. There are programs out there for people in different
Yeah.
states. Like I
Yeah.
did a loan for someone, and we worked it out to where they only had to come up with like 2 grand in cash to close because they had so many. There's a lot of different grants and assistance type programs to where it was very minimal to, and we were able to get them a credit too for closing costs. So it's, yeah, I mean, it's doable. I would say, do I feel bad for people trying to buy a house now? If you're trying to buy a house now because you want it as a good investment, I would say probably don't do it. Like if you're single and you don't anticipate like getting married or like starting a family and you're trying to buy a 3 bedroom because it's a good investment, you probably can wait, just from a lifestyle kind of standpoint.
Unless you're going to rent a couple of rooms out.
Unless you're gonna rent a couple of rooms out,
Yeah.
yeah, that's probably right. But like, who wants to be a landlord at 23? That kind of thing. Because
It's
you're probably living
it's
with a bunch of idiots too at 23, and that'll
yeah,
mess up your
no
house.
no keggers in the brand new
Yeah,
house.
yeah, yeah. It's gonna mess up the flooring, that kind of thing. Put it in the garage, you'll be safe there. Um, what what I worry about for people that are trying to wait for rates to come down versus prices, because right now it's just prices aren't going down. Once rates start to go down, guess what's going to happen to prices, Brad?
Yeah.
They're just going to keep going up. So
Yeah.
if you're
Until you
in,
fix the supply and demand problem, that's the underlying
yeah,
issue that we're dealing with. And the data, like you and I have talked about this, the data does not reflect what what should be happening.
yeah,
Rates go up and the sales price goes up, and
it
it's
doesn't make
because
sense.
there's still people who, and I'm seeing, I'm seeing younger people make adult decisions quicker,
Yeah,
like getting married younger, starting a family younger, so needing a house
hmm
sooner, instead of like living with mom and dad for until they're 30. They're, I mean, having kids at 24, 25,
yeah.
so they have to buy a house and they need starting a family. So
And I think that generation too, they probably like had parents possibly that would complain about the recession and they're like, I don't want to be in that kind of realm. And they're a lot more frugal, and perhaps they have easier ways to make money via like social media or what have you, or just hustling. It's a lot easier to move money nowadays. So it's just like the idea of being younger and trying to like establish yourself and then buy a house because of like what you just said. I actually think the younger generation is a little bit better as far as like financial know-with-all and how to budget their money compared to like my generation. Um, but I would say, yeah, I think the current home buyer is someone that it's of need. And if do I feel bad for people buying now? Not really, because like it's like I said, once the rates start to come down, which it should be coming down the next like few quarters here, um, they're going to be priced out anyway. So buy now, or like buy if you need to buy now, and then refinance in a year or two, and get that mortgage insurance taken off. Or if you put 20% down, take some cash out to improve that bathroom that you bought in that kind of half-ass house or whatever. So
Yeah, and I haven't seen I personally have not seen people put down. Now I've had buyer clients who've had to go over list price to purchase their house, but I've also um, fairly really close to them, and we talk a lot because they, the wife jokes about, hey, I think I'm ready to move, and I just helped them buy a house less than 2 years ago. And the husband just sitting there shaking his head like, no, 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 do not go along with this, please.
Yeah.
But I said, well, I look at your neighborhood and I see that there's smaller houses than yours. You went 15,000 over. There's smaller houses than yours that are selling for higher than that price that you went over. So we felt like we had these conversations ahead of time. So we're not seeing, people having to go 100,000 over to get a house or anything like that. That's kind of,
that's crazy. That's a no. I mean, I would say that's a tough decision to make if you're going to over.
Yeah.
So
yeah, to that extent, because I don't think, even if they had not gained that equity that quickly, we're still seeing, and I don't know if one of these slides, this might be something for a future show, but seeing the gain, like, it's still a really solid investment in general. Home, 2 and a half, 2 years ago, we saw 15%, year over year. Normal is like 3 to 5, I believe, is about what we can expect. So still at 3 to 5, you're still gaining something. So
yeah. Don't cash out refinance your home right now. That's one thing you shouldn't do.
Yeah.
Unless you really have to, you have no other option. Like that has to be the last option. But your housing supply thing. I mean, that's such a people have been waiting for this to come up again. It just hasn't happened, So it's just really weird.
So the last time it's been 2006 was fairly normal, but 2008, look at 2006 to 2008. I mean, the difference there.
Yeah.
It was so a 6-month supply is a normal, average, healthy market. And in 2 years, it almost doubled, not quite double, but we'll just call it that. And then just plummeted, and it's steadily gotten lower. I mean, it's just steadily gotten lower. So that's one of the major things that's feeding this, where we look at the data, we don't see, it doesn't make sense. It's not responding the way the data says, but this is one of the key factors that's in play right now.
This is a big one too. This is really big.
Yeah. So that is, the measurement is Americans have record amounts of equity, total house homeowner equity. From 2006 to, so that's doubled. And I guess it dipped. It in 2006 it went down to, from 2012 on. So for the last 10 years, it steadily climbed. It's steadily climbed.
Yeah.
So I get a lot of I've talked to I've got one investor now. In fact, we're going to look at a house potential a house that he may want to buy. It's got the main dwelling is rented. There's a dwelling behind the house that's also rented, and it's like 150,000. And there's a unfinished basement that we could finish out and rent that. So I said, man, that's like one tax map number. So that's we'll probably talk about like some investment stuff in the future.
Yeah.
I
Yeah,
think that
definitely.
would be a good topic. And but this guy's in his mid to late 20s.
Hmm.
And you know, I'm like, God, man, I wasn't thinking about that at that age, you know, like, hey, I want to build
Hmm.
a portfolio and have, you know, the biggest deterrent for people in investing in rental
Real estate.
properties
Hmm.
is just like I don't want to have to deal with the transaction, deal with the people, collect the rent, and that's where you know I've got a handful of companies here in South Carolina that for 10% of the rent they'll manage everything, get every phone call from you, collect the rent, screen the tenants. You know, they'll do everything for you. So let's say your rental's $1,500. So for $150 a month, you'll deal with the headaches. Okay, sign me up. You know,
Yeah.
and that's where somebody from out of town. You know, I could have an out of town investor
Yeah.
who hey, yeah, Brad, I've got some money to spend in South Carolina. The prices are great. And there's a really good potential for return on my investment. I don't have to take a phone call and have somebody tell me their plumbing's backed up at midnight.
Sure. Yeah. I know a lot of people here on the West Coast, they do that move from like Virginia, for example. I have a friend that does that. And yeah, it's worked out really well for them. They took out a HELOC with me and it was for like 300K and they bought two townhomes for like 80,000 each in like Louisiana.
Wow.
And they've had it for 3 or 4 years. Haven't been crazy with it. It's just they're not like trying to hold like I'm not a real estate investor person, which is so ironic because I work in the finance of it. It's just not like I like analyzing companies and like doing like investments in that way and making money work that in that. But maybe one day I would think about it with my fiance or I don't know. But it's that's the people have been renting out homes for ever, so it's a very common thing. I guess it's kind of your risk aversion or just like your stress level of like, oh, worrying about it. But it's healthy. I think it's a healthy investment to have, and all that stuff. But I guess that's pretty much our show today. The chat was amazing as always. Great questions. I hope people learned quite a bit of the realities and just kind of like if you do own a home and you're worried about 2008, hopefully our show kind of did some bullet points to like kind of deter you from that anxiety. Or if you're looking to buy a house and not trying to like freak people out or like cause a FOMO type thing, but just know that if you're on the side of like, I don't need to buy a house, it's okay. If you are in that need of to buy a house, you might as well get pre-approved, be ready for it, and see if it makes sense for you. And if not, then you don't have, no one's holding a gun to your head, that kind of thing too. And I think as a mortgage broker or a banker, whatever you want to call myself, there's a lot of times where I tell people like, I don't think you have to do this. This isn't a good financial future type of decision for you. Or this may cost a little bit now, but think about 2 or 3 years from now, this isn't going to cost as much. And I think that's what a banker nowadays is more versed into, um, versus back then where it was just like, yeah, just do it because I need to pay off my Porsche, that kind of thing. I don't know. That's just my been experience lately at the bank that I work for. So,
And that
anyway,
carries weight, you know, like that's
sure.
the same way I approach business. I tell my folks like, look, we're going to be, you know, that after the transaction, I don't disappear. If you've got
Yeah.
questions about, hey, you know, we're thinking about updating you know, our guest bathroom, and do you know anyone who does that? I've got some names I can send you. So I want the transaction to go well, and I want to advise you properly. That's the only way I know how to do business because I'm gonna, you know, I want you to be so satisfied that you're going to send people, people
Back
that
to you.
you care about, people that you love. Hey, Brad did such a great job with me, or Ferg did such a great job with me, that I want you to take care of these folks who mean a lot to me, and that's the kind of business that's really worth building here. Thanks, man. Thank you very much for being here. First, man, you got the gold medal. You were first in the
gold medal
chat
for
today.
first. Yeah, definitely. We'll see you next Wednesday with a new topic and just some more financial news and some good stuff. If you guys could like, subscribe, and just tell everyone about the channel, we really greatly appreciate it. I would say that I don't think our goal necessarily is just like grow and like be like that channel, but just more so I really, my goal really myself is just to really help educate people and tell them the realities and of buying in their financial situation and how they can help themselves or what to look out for if they want to grow it too. So we will see you all next Wednesday. Same bat time, same bat channel, all that good stuff. And thanks again. Have a great rest of your week, everyone.
Y'all take care.